Welcome to The Explainer. Today, we're going to try and make sense of a pretty complex market. We've got confusing job numbers coming out of the US, some huge moves in gold, and a whole lot of conflicting signals in the crypto world.
So, here's the plan. First, we'll dive into the US economy and figure out what's going on there. Then, we'll look at how the big money is reacting, flocking to hard assets like gold. And finally, we'll jump into the wild world of crypto to see if a new rally really has the fuel it needs. All right, let's get into it.
First up, the U.S. labor market. It's sending some seriously mixed signals right now. And you know it's a big deal when even Fed Chair Powell is paying super close attention.
So why is everyone so confused? Well, it really just boils down to the data being all over the place. In fact, some analysts are literally calling it a certain chaos right before a major report drops. Everybody's kind of bracing for a surprise. I mean, just look at this. On one hand, you've got these alternative indicators from places like Revolute Labs that are basically screaming job cuts for 2 months straight. But then, on the other hand, the official government data comes out and says, nope, things are actually improving. It is this exact contradiction that has the market completely on edge.
And when things get this uncertain, what happens? We see a classic flight to safety. Big money is pouring into one of the oldest safe havens in the world, gold. And this isn't just a small shift, believe me, it is a powerful, powerful trend.
And don't just take my word for it. Simon White, who's Bloomberg's top macro strategist, says gold's rally is far from over. He actually sees it as just the first wave in a much bigger tide, predicting that this demand for real, physical stuff is about to spread across the entire commodities sector.
Now, this isn't exactly a new trend, but it is definitely accelerating. It all kicked off back in 2008, right after the financial crisis. That's when central banks in emerging nations started to steadily pile up their gold reserves. But look what happens from 2022 onward. They hit the gas on gold and, at the same time, hit the brakes on buying dollar assets.
And the scale here is just massive. We're talking about these central banks more than doubling their gold reserves in that time. For them, it's a crucial safe haven that's completely outside the traditional dollar-based financial system. But it's not just the big central banks. Everyday retail investors from Asia all the way to North America are jumping in too. So what's the common thread? Well, they're all looking for protection. Protection from their currencies losing value, and they're looking for an asset that's kind of insulated from the fragility of the financial system and government control.
You know, this huge surge in gold might be more than just a story about one asset. Some people are seeing it as the canary in the coal mine, signaling the next big move for the entire market. A lot of analysts are starting to say that when we look back, gold's incredible rally is going to be the defining story of 2025.
Which, of course, raises a huge question. Could 2026 belong to the broader commodities market? And there's a really strong historical reason to think so. During the last major inflation spike back in the 1970s, commodities were the second best performing asset class, right behind, you guessed it, gold.
And we are already seeing the early signs of this happening. A whole range of stuff, from industrial metals like aluminum and copper to agricultural products like coffee and even live cattle. They're all breaking out of these multi-year trading ranges. The market is definitely waking up.
All right, let's switch gears. We're going from the physical to the digital because a very specific and pretty influential group of Bitcoin investors is making some incredibly aggressive moves right now. So first, let's just get our terms straight. In the crypto world, you've got the giant whales. A Bitcoin shark is one step down from that. They're significant holders with somewhere between 100 and 1,000 Bitcoin. Just think of them as wealthy, really well capitalized, and very savvy players. And these sharks, they are in an absolute feeding frenzy. In just the last 7 days, this group has snapped up an extra 54,000 Bitcoin, mostly by buying them up from smaller holders. Now, historically, this is a huge, huge signal. The last time these sharks were buying Bitcoin at this kind of ferocious pace was way back in 2012. And what happened next? Well, Bitcoin's price absolutely exploded by 900% over the next year.
But, and this is a really big but, here's the catch. While the sharks are buying like crazy, the even bigger players, the whales with over 10,000 Bitcoin, they've been selling. This is creating a massive tug-of-war right at the heart of the market. As analyst Charles Edwards points out, all this new institutional money that's flowing into Bitcoin is pretty much being canceled out by intense selling from these older, larger wallets. Basically, the old guard is cashing out while the new money is trying to come in.
So that brings us to the million-dollar question, right? Even with all these bullish buyers, is there enough new money, enough liquidity flowing into the system to actually win that tug of war and push the market higher?
One of the best ways to check is to look at the growth of stablecoins. You can think of them as cash on the sidelines of the crypto world. It's the fuel for the market. And as this trend shows, after peaking recently, the rate of new money coming into the ecosystem has started to slow down, and pretty noticeably too.
What this suggests is that the overall liquidity environment, the fuel for any rally, it might just be weaker than a lot of people think. So while the sharks are betting big, the question of whether there's enough cash to actually support that bet, well, that remains wide open.
If you found this video helpful, be sure to smash that like button and subscribe so you don't miss your next Daily Edge. More news in our Telegram channel in the first comment. See you next time.